everyone, you're watching Weekly Forex Outlook by Light Forex. The US dollar is trading close to the highs of 2018 as traders await further rate increases by the US Central Bank, the Federal Reserve. This contrasts with the policy of other major central banks, which do not plan to tighten their monetary policy actively, and as a result, this gives the USD an advantage. As a result, if a dollar manages to rise above technical resistance, it will be able to set some new highs. If we look at the market sentiment this week, it is rather positive. Investors think that China's tax cuts next year will have a positive impact on global economy, and these positive expectations outshine the geopolitical concerns related to tensions between Saudi Arabia and the Western countries over killing of a journalist. As a result, the general perception of the market is rather positive. And to get a better idea of what lies ahead, let's have a look at the economic calendar at lightforex.com. Here we can see that we get the most important events for the key currencies, and these events allow us to trade on the news. One of the most interesting events in the upcoming days will be the meeting of the Bank of Canada on Wednesday. Here it is. We can see that the Canadian dollar has been rather weak so far. Here is the chart of the US dollar versus the Canadian dollar, and we can see that the currency pair increased, meaning that the USD increased versus the Canadian currency. Canadian currency suffered as Canada released weak inflation and retail sales figures. However, it is expected in the economic calendar, we may see that the Bank of Canada will raise its main interest rate from 1.5% to 1.75%. At the same time, I'd like to point out that this rate increase is already priced in by the market, so it is already taken into account in the exchange rate of the Canadian dollar. So if the central bank increases the rate but gives no hints about further rate hikes, then traders will use this short-term strengthening of the Canadian dollar as an opportunity to sell this currency. Here we can see the chart. We can see that the US dollar Canadian dollar currency pair right now came close to the resistance line, which connects highs of June and September. Resistance is located around 1.3130. This is the high of last week, and we can see that last week the currency pair managed to close above 1.3080, the previous highs. So moving averages are horizontal. We don't see the great momentum to the upside, and we need to wait for a break of 1.3130 to target higher levels at 1.3170 and 1.3225. This will be the upside targets. If the Canadian dollar strengthens on the Bank of Canada's rate hikes, then the strength of the Canadian dollar and the decline of USD CAD will be limited, and we are looking for levels around 1.30 as the main support level. We don't think that the pair will decline below this level, so here traders will look for the opportunities to buy, and also support is provided by the moving averages on the daily chart at 1.3066 and 1.3012. In addition, one of the negative factors for the Canadian dollar and one bullish factor for the USD CAD is the dynamics of oil prices. You can see that crude oil is getting to lower and lower levels, and the next level to watch here seems located around 67.20 level. So getting back to our economic calendar, let's have a look at other important events and pay attention to Thursday. On Thursday there will be a meeting of Turkish Central Bank. No changes in the interest rate is expected. Let's glance at the chart of the US dollar Turkish lira. Here we can see that after this big consolidation in a triangle on the daily chart, Turkish lira managed to strengthen versus the USD, but there is rather strong support at 549. Here we find 100-day moving average. So no changes in policy of Turkish Central Bank may make the pair return higher to the resistance levels around 5.78 and 5.97 marks. Next important event on Thursday is the meeting of the European Central Bank. Here it is. The ECB won't release any economic projections, and as a result, traders have very low expectations of any changes in the central bank's policy. In addition, there are some negative developments in Europe. I mean, increase in Italian and Spanish borrowing costs, different tensions which are related to Italian budget, which is not accepted by the authorities of the European Union, and some negative impact from the weakening of Turkish lira on the European banks is also a problem for Europe. As a result, there is a chance of negative comments from the ECB President Mario Draghi at the central bank's press conference, and as a result, the risks for the euro on Thursday are from neutral to negative. So Thursday may present an opportunity to sell the euro. Also on Thursday, at the same time as the ECB press conference, there will be a release of US core durable goods orders data, and this is a rather important indicator of American economic health. It shows us how US production is developing and evolving, so we'll have a look at this indicator. And on Friday, US will release the advanced reading of its GDP for the third quarter. According to most estimates and predictions of different analysts, they expect a strong growth of American economy, and this, if the figures turn out to be in line with expectations or greater, then this will provide the new impulse to the upside for the US currency, because this will solidify expectations that the US central bank will continue raising interest rates. So these are the main things from the economic calendar here. And now let's turn to our trading terminal and have a look at charts of some other currency pairs. So euro dollar failed to get above levels in the area of 1.16. It turned lower, and we can see that here is a kind of consolidation in a triangle between the levels of 1.1430 on the downside and this descending line which connects the highs of September and October. Resistance provided by this border of a triangle is currently located near 1.1560. Decline below 1.15 will make the pair retest support levels at 1.1460 and 1.1430. Despite some positive sentiment at the start of the week, still I would like to highlight Italian problems which are rather serious, and Standard and Poor's rating agency will review Italy's credit rating on Friday. So we expect more of the negative pull for this currency pair to the downside to the support levels. Another interesting currency pair is the British pound versus the US dollar. Here we also have a consolidation in a triangle. You can see the upper border and the lower border, and the pair is fluctuating between this in a symmetric triangle. Currently, we are trading closer to the lower border of this triangle, just near the important psychological level of 1.30. Brexit is surely the main topic for the British pound, and although the European Union negotiator Michel Barnier said on Friday that a deal with the United Kingdom is done by 90% already, still there are a lot of problems, and the main risk is political problems of British Prime Minister Theresa May. She may face a vote of no confidence by her fellow British lawmakers, and if British Parliament opposes Theresa May, the British pound will break the lower border of this consolidation pattern, will go down below 1.30 and the FIBO level at 1.2980. And the next targets in this case will be surely the next minimum located around 1.2925, 1.29 and 1.28, depending on how big a disappointment the market has in the US politics. So all in all, for now the picture looks rather grim, and to have its prospects improved, the GBP USD currency pair needs to overcome resistance at 1.31. This would open the way for a correction up to 1.3145 and the top of the triangle at 1.3220. However, the outlook is not really positive for the British pound so far, so we'll wait for further Brexit developments and see whether we get positive news or negative news, as news is the main driver of the British pound. The US dollar managed to stay within the uptrend channel versus the Japanese yen. We can see that support at 112 made the pair turn up. And now the next test for the prices is resistance around 113.10, which is the high of July. And the next level after that will be located at 113.70. So here the dynamics of the pair will depend on the market's risk sentiment. So far it is positive. And the ability of the US economy to show us strong data releases. For that, we'll have a look at the economic calendar on Thursday and Friday, when the main US data releases will take place. Finally, a look on commodity currencies. Australian dollar is trading just above support at 0.1790. We can see that volatility in this currency pair so far was rather low. Our previous levels, the bigger pictures still stand. This is resistance at 0.72 and support at 0.70. Before that, there will be support at the recent lows around 0.7040. These are the main levels which will be necessary for trading Australian dollar versus the US dollar. Australian dollar is hurt by some domestic political issues for the Australian dollar, so it is mostly under pressure. And we are awaiting a break of range between 0.7090 and 0.7150 to target our lower levels or higher levels. But the downtrend, general downtrend, is still present. And finally, a look at the chart of gold, which used to show positive dynamics after a break of a triangle. It still has attractive levels on the upside, but take notice of 200-week moving average at 1234, which represents a significant resistance and may lead to some kind of correction of gold and retest of its former resistance and now support and 1207. This is all for today. Thank you for your attention. Visit lightforex.com, and if you are interested in trying out the recommendations and ideas of this video, you can download Light Forex demo account by the link in the description. If you liked our report, please subscribe to this channel and press thumbs up for this video. Good luck in your trading.